Good morning. Good morning. Happy Tuesday. Merry post Christmas to everybody. We're going to give it a couple of minutes. Make sure did everyone get in okay? It was weird. I had to like change the date. It wouldn't let me start the meeting, even though it's the same link for Mondays for our weekly opening. So anyway, it took me a couple of minutes to get going. Let me know if you can see my screen, that you can hear my voice. We'll give anyone a minute or two late a second to catch up, and then we'll get going. Good morning, Perry. Mm. I'll tell you what, Christmas is exhausting, though, right? I was, I woke up tired today. Already on coffee number two. We'll give it just a couple of people are in the waiting room waiting for their audio to come on. So everybody else, it's good to see you. Thanks for coming out. We had amazing attendance. Hardly a drop off. That shows the strength of our group. Sandy says severe storms. Uh, Sorry to hear. Is that rain? I'm assuming then. You guys get some flooding sometimes. I have worked with traders out of Australia before, and as they faced some severe weather conditions. I got a new office chair for Christmas. My old one had seen better days. I just bought the same model from IKEA, but it's a little stiff. My office chair was like shoes that are broken in, super comfortable, but at a certain point, it's going to take a little while to break it in. Trees down, power lines down, some casualties. Oh, sorry to hear it. I hope everyone in the family is safe. Okay, let's dive in. Welcome out to the Market Watch Group Weekly Opening Bell. My name is Scott. I will be your host. Here are our disclaimers as usual. And here's what we're going to do. Opening futures and news. Not much news this week. We already know that. We'll look at the economic calendar. We'll look at our posture for anyone who wasn't there on Sunday. We stayed the same as a preview for those who might have missed it. We stayed the same, but honestly, I feel like we could have ticked it up. There were a couple of places where we just decided to subjectively just kind of keep it. No reason to rush into this. Oh, look how strongly bullish we are. We're bullish. It's if it continues to show strength, we'll continue to add to the score. But yeah, we'll look at mindset for open trades. I have a few time spreads going that we'll take a peek at. I told you we're going to be looking at those and how they did. If you were there on Friday at the weekly market wrap, we're like, all we have to do is get it basically to market close, and we get Friday, Saturday, or excuse me, we get Saturday, Sunday, Monday, and by the time the market opens, we're on Tuesday. So that's where the time decay really comes into play. If you held trades, you're Vega negative. If you held option trades over the weekend and you're theta negative, you're losing from time. You lost 3 days of time. Nothing could happen. Ideally, we had bought low implied volatility options that were cheap, and so that time loss was acceptable for carrying trades through. All right, we're going to talk about the opening range as we see it, what the implications are. We have an enormous shopping list if you didn't see the email or see it, our list of potential setups is vast. We got tech, we've got consumer discretionary, financial, industrial, even a little bit. The most overbought sector, I think, was communication services. Finished a trade on Google last week, on Meta. They both had run, but there's still a couple of trades. I believe Netflix. Yep, Netflix is in there. So it looks good. I'm excited. Let's get to it. How's everybody feeling? It's quiet. Let me know. Trading plan section of the week. There is no trading plan section this week. Remember, this is your 1 week off. You get 1 week off from your trading plan. The rest of the time, the expectation is we're continuing to improve that beautiful document. Next week, first week of the year, we'll have our New Year's trading resolutions. Yes, feeling good, Sandy. Love it. Love it, love it. Let's dive in. Let us dive in. We'll start here. Futures. What do we see? Slightly positive. Look at Santa. Water skiing. Is he water skiing? What is he doing there? They look warm, but he looks happy. So futures are up 11%, or excuse me, 0.11% for the S&P, 11. 0.05 for the Dow. 0.2 for the NASDAQ. 0.4 for the Russell. Crude oil. Remember last week we talked about oil starting to kind of resurge. We saw a break of its consolidation and it trying to insert itself. Not to the point that we're like, oh no, now inflation's no, just to the point that we're saying, hey, you know what? There may be a trade for us in oil that becomes kind of a balancing of things. If oil moving higher is going to put some kind of pressure on the market, we should at least capitalize from having a piece of it. So it is interesting to see oil up 2.65. Wall Street poised for higher open as rate cut bets strengthen. We've already seen that. We've already been talking about that on our Fed Watch tool, right? We've been looking out at January and even the March meeting. We've been looking at the first two meetings and watching the probabilities. We know that the probabilities are really starting to lean towards quarter point next meeting, very next meeting. We talked about the fact that as soon as we believe the Fed is done raising rates, we start asking for cuts. And so whether or not we get them, maybe they dial it back. It's like, hey, we'll drop it a quarter point. Market will love it. It's getting priced in, however. So if the market prices it in and then the Fed doesn't, that's when we start to see Alan Greenspan type moves where he doesn't listen to expectations. He does what he's going to do. But we haven't seen that. The Fed has been fairly predictable and transparent. And so the more I see that the future, in fact, let's just pop over there since they mentioned it and we'll look at it. Let me reload this thing. So January 31st, we're looking at 7-1. Oh, sorry, no. Not a cut next meeting, the one after. Sorry, I misspoke on that. Next one is still 7-1, staying the same. But the one is now for a cut by March 21st, the second meeting of the year. They're looking for 6-1 odds the other way that we get the cut. And by the third meeting, they're asking for a second cut. That's the probability. Nothing, one cut, second cut. So by May, we're down half a point. So that's what we're looking for right there. Retail sales grew 3.1% during holiday season. People are employed. People are willing to spend money. That keeps markets moving, right? As long as we don't have any uh, unpredicted issues that pop up. Things look pretty fine. What else? That is the bond market just sounded its most severe alarm in 50 years. It could signal a big move in the stock market in 2024. Interesting. Motley Fool. Oh, I'd maybe, not now, but I'd maybe take a look at that. I'd maybe take a look. Let's look at the economic calendar. Like we said, not much. Christmas yesterday. Today, prices, home price index, you can see they're actually starting to project prices coming back up. They had been dropping. Jobless, nothing on Wednesday. Jobless claims on Thursday, nothing else. And nothing really on Friday. So the economic news this week is not much. Whatever we had is what we expect to continue. Great. That's good for us. We like that. We definitely like that. For those who missed it, let me show you our posture. Long-term trend stayed the same. Short-term trend stayed the same. And this was the surprise. I actually thought volume was going to drop, but we ended up still with a pretty favorable score. It was I thought it was going to, right? I thought we were going to see a decline in that score. But it was the numbers held up. We ended up with a point, let's see, it was 5-2, I believe. And in that situation, I said, okay, we'll leave it. I bet it drops. I still think it's going to drop soon. But at this point, the market posture score can handle that. Major market raised up a tick. Sector rotation still strong. This was a little unexpected. I dropped this a little bit. Let me show you if anyone missed this. I dropped the VIX score. And the reason why it was, and this is what's interesting, is it didn't trigger. There was no trigger for a hedge of any kind because I put my line of consolidation up here and I still see it there. But what we did do was we broke this high, right? We broke that high. That wasn't enough for me to put a hedge on with where we are down at 14. But it was enough for me to say, oof, you know what? I'm gonna drop that. Overall, though, when you look at what we have going on our stochastics, and when you look at this is interesting even today, because on Friday we had this looking like it was going to roll over and come back down. But when you look at where we are today, we're back up 0.72. I mean, that's kind of a weirdly big jump to the upside when the market itself opened higher. Okay. I think it'll play itself out. I'm not going to be concerned about it because as of now, the market still is, whoops, let's go SPY to look at the opening couple of minutes. It's just kind of grinding at this resistance level up here. If you look at our stochastics, this looks quite strong. It looks like the sellers had a chance from here to here. The sellers had the floor. They didn't do anything with it. They had one day where they really had some kind of strength, and now it looks like it's turning back out, and that might be it. This is ready to go again. And I know people say, well, Scott, you're at this upper resistance level up here on your long-term trend. But remember what we see when we go to the weekly. We've seen this before where it hits, but can just keep on pushing higher through and get one last grind before we see some kind of a pullback that might last 2 or 3 weeks, 4 weeks. You can see here there was 3 weeks of pullback. So could we get this thing through the first, second week of January? Let me show you our historical charts and how this tends to work. So you can see we still have these last 2 weeks of December. And then if you look over here at the beginning of the chart, the first week of January. So should we have expectations of one more bullish push before we might have a consolidation? And you can see this consolidation would last 2 or 3 weeks, which would give us something like this right here. You can see here's the beginning of the year in 2022, although 2022 was bearish. Here's the beginning of the year in 2023. Yeah, I think there's plenty of potential to still push to the upside and give us a bullish spring. Remember that spring, it's one of our better times, especially March, April, right? So yeah, okay, feeling like we're in a good place. So the posture 6.5 still. The futures, or excuse me, the mindset for open trades. Let's dial back. Let's just actually go straight to the watch list. Okay, now when we look at the opening range here, you can see the buyers are starting to push even in these first 5 minutes. Got to get my watch list up. And starting from the top, whoops, that's not what I meant to do. There we go. Apple. We're not in a rush. I want something to start going the other way, but this is knocking on the door. The sellers have had plenty of opportunity, well above the 50, well above the old low. This is in this oversold territory, and yet it hasn't broken back below this area here. Apple looks fantastic. I'm definitely looking for a signal on Apple. Okay, let's keep going. Aflac. I think it's grinding along with the support level. It's holding above the 50. AIG's kind of doing the same thing. Failed to launch last week. Failed to launch. Gave a signal, failed to launch. I actually took a small loss on this one. I think it's still viable if you like the insurers. But what I don't like is, well, it's not that I don't like it. It's that I like other things in financials. There's so much strength in financials that it's like, do you need to settle? Like, are you so intent on trading the insurers? Be mindful of that type of thought process. When you're trading, are you adapting as you move through, even within a sector? Where this is where the strength came first for financials. We got trades here while the others were still kind of working their way out. But over the last little bit, it's shifted. And we've seen more strength in credit cards and banks and brokers than we've seen in insurers. Great. Make the adjustment. I mean, you could still trade this, but I think there's better. Let's keep going. Amazon. I don't know. That could be the flag. We're in a strong market. As much as we want to see things go up and then pull back down and then go up and then pull back down, that might be too much for us to ask for. This might just be it. This little flag, that might be it. And you can look at your stochastics. We have to be ready for this to just turn and stay up here for extended periods of time if this thing is going to move into a stronger trend. Oh, my trend lines are terrible. But you get the gist. I have this on my list as be ready. It might give a signal. AXP. I don't know. I mean, you could make the same argument. I just can't trade these one-day consolidations. I'm going to look at this as still hitting resistance and wait for that. I've got this old high back here that I think it might come back to. I've got my 50 coming up. So I definitely would rather be patient for this than think, okay, I'm going to have to put something like this on. I think we're going to find opportunities that have a better setup. So let's be patient. Boeing, beautiful looking flag pattern. So strong. This is the sellers. That's it. That's the sellers. How much do we think that they've been able to do? Hardly anything. Hardly anything. BK. BK, strength. This one, the stochastics has come down, but you'll notice it's not getting below here. And this is where we've seen it go. And yeah, I think if this turns up out of here, let's be ready. BK looks strong. There's a lot of these. I've been taking two. I might even go three financials this time at once, but I don't want them to look identical, right? I want to be thinking, let's do one on credit. So maybe Capital One and one bank, and then maybe a regional bank like BK or Wells Fargo or PNC. We can spread it still. So be aware of that. BLDR. BLDR signaled last week. It's moving. Is it still viable? I would say, yeah, these are your transitions. This is it. If you missed before, this would be about, you don't want to wait any longer for something like that. But we talked about this one on Friday being valid. Did anyone take this one? I thought a few people did. This is an old friend. We said it's been something that was traded back in April, May, and June. Back in this area before this decline. BLK looks viable. BlackRock looks pretty strong. BX. So Blackstone, same kind of a thing. There it was. There's that flag. There's it popping out and stochastics turning, and it's already starting to go. So different financials are firing off triggers at different times. Any one of these, right? BLK probably looks the strongest if you haven't taken one. I bet that's just barely starting to go Heikin-Ashi right there. This would give me the ability to not necessarily put my stop down here, but maybe right snug up underneath here and be a little more aggressive with your stop. So that's what these Heikin-Ashis can do on our entries. Caterpillar. Looking like it's trying to turn. Same kind of a thing. Capital One, not yet. So if you're thinking, oh man, I've missed all the financials, you haven't. This one's just still setting up. We'll see others that are still setting up and we can wait for it. Things are giving us pretty broad windows, right? It's sometimes you'll see like every stock in a group gave 1 day. You had 1 day. That was the window. Other times it's like we had things start signaling on Thursday, had a signal on Friday, have a signal today, have one that might not signal to tomorrow. So across the financial sector, there's a good window. Oh, don't feel rushed. Don't feel stressed like you missed something. Be patient and wait for your pitch. COP. That's what we've been saying about oil. This is what I mean. We had this consolidation that really tied well with the 50 and it broke the 50. Man, we're up here now. Are we like, oh, inflation's coming back? No, we're saying, hey, oil looks like it might be tradable again if it does something like this and gives us a higher low. And it's going to be, trying to make a run up to these old levels. It might take a couple of times to get there, but certainly if that happens, that could bring some friction to the stock market. And if it does, let's make sure that we have something that's capitalizing. So we're definitely going to be watching it. A bit like popcorn in a pot. That's it. You get one, boom. Then you get two more, boom, boom. Then another one. I like the analogy. Costco, it's on the table. It was a high flyer, but it's on the table right there. I don't think you'd have a Heikin-Ashi yet. Maybe. Okay. Yeah. Same thing, actually. What's the best part about this? I could set a pretty tight stop, give myself a real strong reward to risk ratio so that if it does take off again, I'm in it. If it fails, I took a small loss. I could put my stop here, next day raise it up. By tomorrow, by Wednesday or Thursday, there's no more risk. If it moves, great. If it doesn't, well, then okay. I like Costco. Is anybody trading any of these? Is anybody in? Is anybody looking to get in, let's get a good lively discussion about what you're comfortable trading. Copart. Um, Someone brought this up. I like that. Good signal. I think Perry brought this up. A little bit stalled today, but I wouldn't be worried. The stochastics looks good. Candlestick's a bit iffy this morning, 13 minutes into the day. Is not that reflective. So be watching. CrowdStrike. This was one that we've been talking about. You can see the stochastic starting to pinch. This is where I would be thinking about an anticipatory trade. I can get my stop right underneath maybe this old low. Catch it now by the time I get the crossing signal on the stochastics and it's up here. I'm ready to start moving a stop. CrowdStrike's very strong. A lot of momentum here. You can't expect that it's going to give you the exact setup / trigger that you love to see, unfortunately. We have to be ready to adapt to those signals. I think CrowdStrike looks great. CXX looks a little overbought. I don't, even though we had a little bit of a stochastics turn and you had this, I don't see it. I don't even see a single red candle that indicates any kind of consolidation. So that one's not there yet for me. Delta, very close. Delta, your stochastics has turned, but your candles are just a little bit delayed. So if you decided, you know what, I'm going to wait. The high of Friday was 41.28. We're at 40.93. You could say to yourself, I'm going to wait for this thing to cross 41.40, 41.35, so that the buyers come in a little bit. Let's look at this on the 5. Don't zoom. Yeah. I would say for me, I would want it to break these highs from Friday. So if Delta breaks 41.30, I'm good with it. That's good enough for today. Absolutely. For today. DHI, it's kind of sideways. DIA is up. The Dow's up 0.11. Not yet on ENVX, but it's very close. Fastenal is just overextended. Floor. You have a pinch, but not a turn, but you have a nice candle. Could I take this trade? Yes. Would I consider this anticipatory? Yes. Yeah. It doesn't have both signals confirmed yet, but this is what it would look like right here. It hadn't turned yet there, just pinched, but the candle looked pretty good. Then it went. So yeah, I think floor looks absolutely viable. That's an industrial. So we have industrials. We know some industrials are setting up and starting to trigger. We know that technology setting up hasn't triggered yet, mostly. Financials has been triggering. Boom, boom, boom. And there's still setups and still opportunities. Here's gold. Gold's looking a little overextended, hitting some resistance. Here's Google. Man, look at Google. Keep on going. No, so I finished Meta. I do have one small piece of Google left. That's the one I carried through. I always forget which ones I did. Home Depot. Look how close. I got rid of Gap. If you notice, we just went from Google to Home Depot. I got rid of Gap. Just wasn't moving well. Let's just see if I made the right decision. And I took a loss on it last week. I don't think anyone else traded that. It was just me. I'm like, yeah, I'll take that. Oh, of course. Now it does this. Oh, Gap, you son of a gun. You son of a gun. It's doing that just because I took it off the list. You guys have had that happen to you before, right? Of course. Yeah, that one I took here, and then it cracked me out here. Then it stabilized. Now it's trying to turn. It's just mocking me. I don't need to see that. Home Depot is gonna help ease my pain. I feel it. It's ready. I went to the new Home Depot down the road. It's beautiful. IBM. Come on, IBM. You can do it. Stochastics looks fine. The we're on the trajectory. We're early in the day. There's nothing here concerning yet, but if it crosses this path, that's why I like to have these lines here. Because if it crosses this way because it's going sideways, that's concerning, right? And I start thinking, ooh, maybe I want to get my stop from here to here, so that if it fails, I take 40% of my max loss, 30% of my max loss. And if it gives me one extra day, I can get my stop to break even. But yeah, I'm not concerned yet. We're 18 minutes into the next day, so let's be patient with this. You'll notice back here we had 3 days in a row sideways before it really took off. And here we got a signal, then an inside day. You'll notice right there, there's that inside day. And then it took off. Don't be impatient, right? Do not be impatient. ICE overextended. I've told you before, I can't make those trades. I can't make those trades. Those 1 day consolidations, that's not my wheelhouse. I don't like them. I watch them. Intel, woo. I know that Steven stayed in some of his. That's paying off handsomely. Look at that sucker go. I didn't catch this as the consolidation. I did well. Got most of it up to this area and then got out, but look at that sucker move again. So strong. Already up to its next extension, right? We were watching this with some fibs and quickly got to the first extension, then got to the next extension. So yeah, those things are flying. IWM still looks pretty good. JP Morgan, it's in consolidation. The buyers have the sellers have the floor for the last 4 days. What have they done? Absolutely nothing. Good morning, Bob. 6:50 a.m. in LA. Good to see you. JP Morgan, getting close. KKR, like I said, you don't have to be like, I missed them. No, there's plenty setting up. Some are moving. If you're in one or two, it makes sense. If you haven't taken them yet, these look beautiful. They look fantastic. You didn't miss anything. MasterCard, nothing there for us though. Meta. I finished my Meta last week, waiting for the next opportunity. What do you think? Whoops, it was not straight. Let's try that again. Something maybe right across here, consolidates down. This will continue up, keeps that above the 50. Yeah, I'll be patient. I want another run. I want another run at Master or at Meta. Okay, if anyone stayed in, maybe this one picked me off as well, right there. A few people stayed in. If you have a spread, you're probably doing okay. If you bought the option, this could be taking too long, right? If you're theta negative during that period of time, whatever you've gained from the stock, you may have lost from time. So just be careful if you're in that one still. It's got to get going faster. For me, I'm just waiting to see if it can break out of this little range a little better. Then I'll take the next one. Netflix, looks like it's in its consolidation, but I think it could break out at any time. That's why I have it on the list. Even though the entire sector is a little bit overbought, there's a lot of strength there. NVIDIA, if you like chips, if you like what Intel is doing, NVIDIA is signaling. And it might even be giving us a Heiken Ashi. Yeah, maybe. I might put my stop not all the way down here, but maybe under these two shadows, 483.30. So it's only about 9 points. If we catch this thing moves 30, 40 points easily. I would say my target would be at least 520, maybe even 520, maybe even 530. So if I take 9 to 520, that's 27. That's 3 to 1. risking 9 to make there. So NVIDIA definitely has some potential. Picard overextended, but we're watching. PDD. That's a weird one. Maybe. I'll keep watching that. PLTR looks like it's holding up at an ever so slightly higher low. It never really broke the consolidation, but I might forgive it and give it a chance. PNC, sellers haven't done much. It tells you how strong these are. Royal Caribbean, I don't know, just looks a little overextended. Rivian, automaker, looks close. Roku, if you like bouncing off the 50. Shopify, not yet. SMCI, just like PLTR, those both look like they're setting up. So that's another. We've got software and consumer electronics with Apple. We've got NVIDIA for chips. We've got SMCI, PLTR for software, CrowdStrike for software, security, and AI stuff. I mean, it's across the board. We've got banks and brokers. We've got industrials. It looks good. I think we're going to be trading this week. SPY's holding up. Let's look at that opening range now. Okay, so if we break 474, we could end up back down at Friday lows, 472. But if it holds, back this up a little bit. I think we make a run back at these old highs at least today, up near 476-ish. Yeah, let's see what happens. Remember, we're not expecting much volume this week. We are really, is this 1 month? What am I on? We are really not expecting much volume. I mean, I would say you can see yesterday or Friday, we had 67 million with an average of 78. I would say today we'll be lucky to cross 50 million. Lucky to cross 50. We'll see. Tesla, nothing there for me. I'm actually getting ready to bounce it. I really don't. I haven't traded it hardly at all. In fact, with Rivian on the list, I'm going to get rid of it. I'm going to bounce it out. I hope no one's too sad by that. UBS overextended, UMP overextended, the VIX. Okay, so the VIX is still, for whatever reason, has popped up a little bit, but it hasn't gotten above the highs over the last 4 days. And the stochastics is still convincingly looking like it's crossing. So let's keep an eye on that, but I'm not too concerned. WFC, another financial that still looks great. There's several financials. I wouldn't be surprised if you're in one, but I also think that there's plenty of opportunity here if you're not. I actually like COP better. If I'm going to do an oil trade now, I would say that COP looks better poised for it. This one can't seem to get above its 50-day. It's really hitting some resistance there. Walmart's a maybe. Walmart now seems like it's shaking off. We've exceeded this high. We're bumping the 50, but if we come down and we get a higher low, right? If this thing kind of rolls over, comes down here and gives us this, I would actually think that's viable. I would be willing to take that. Costco's better. I like Costco better for sure. Steel materials look okay. Here's basic materials. Here's communication services. I definitely think that overall the group is more at resistance than not. There are a couple of trades that are setting up that, that could be viable, but I'm a little leaning towards focusing on the other groups because they all have signals. We have discretionary, we have industrial, we have financial, we have technology. So we can be patient there. Energy, maybe. Financials looks great. Like we said, industrials looks great. Already starting to move again. Technology looks strong. Staples, utilities both look stable, but not much more. There it is. That's what we have. Let's take a look. Let's take a look So IBM is flat. I put that in here. Couple of contracts. That's just kind of flat. The what about my fave QQQ? The Qs are looking pretty strong. Right? They've pulled back. They look like they're popping and turning out. They look strong. If you remember, I told you we're going to come in on Friday or on Tuesday. Nope, I want this. At SPY. And let me break this down into different trades. This was the first trade. This one I put on more than a week ago. This is a calendar spread. And you'll notice that it's not at the sweet spot, but look where it is. Still up to $500 in profit. What have I done with it? Absolutely nothing. I take a peek. Oh, look, hasn't done anything yet. No, that's wrong. I'm not up 500. I'm up 385. That's today. 385. But am I going to hold on and see if I can't get another day or two? You can see if I get another day or two. 1, 2, 3. That's Wednesday, Thursday, Friday. If I get to Friday and I'm still in this trade, and I might say anything below 477, I keep this on. If I get to Friday, then I get Saturday, then I get Sunday, then I get Monday, then I get Tuesday. And look at that. Now it's up to 800, right? Just sitting here. What's happening? My time decay is starting to just really crank into favor. So even though my sweet spot's back here at 470, right? Even though the sweet spot's back here, which means that if this drops, it actually makes more money, right? It makes more money. This trade looks great. So that's one piece. Theta at work, baby. You know it, Bob. Theta at work. Let me go back. Go to today. Let's put this other one. Now, this is one we put on together. This was the 475. We talked about time spreads in the options class, and then we put this on. And you'll notice this one is right at our sweet. So I wouldn't touch this at all. This thing is just in a perfect spot. If it goes up a little, we're fine. If it goes down a little, I'm fine. I could still adjust this all the way until this end of this week. These calendars expire at the end of next week. So I could carry this through the weekend as well. If I carry this to Friday, it's up to 440. Then I get Saturday, Sunday, Monday. By the time we get back on Tuesday, bam. Now, what if I put these two together? What if I make them a team? So this is what they look like as a team. You'll notice instead of a peak that drops, I have a peak that extends across and then it drops. I probably could have put this 3 points wider if I really decided to, but we left it there. Now what happens? If I get to Friday and I'm anywhere below, now I have all the way to 480. Then I get Saturday, Sunday, Monday, Tuesday, and this thing's up at $1,600. It's enormous amounts. It's not that many contracts, to be fair. So this is why I like time spreads. I'm still, look, our focus is still directional trading. Yeah. This is just something I can put on. Now we also put on a bullish diagonal spread on the calendar, on the SPY. A little bit more expensive. That's why there's only 2 of these. It was much more expensive. This is what it looks like. So you'll notice if it just sits in this area between 471 and let's say 490. This is between here and let's say here. The sweet spot is 478, which is higher than where we are now. How do I know that's the sweet spot? Because that's the highest point right there that my profit gets to. So if it sits in this area, time decay moves this purple line up, right? So if I start advancing this in time, that purple line advances. That's time in my favor. If the market moves higher, my sweet spot's out here around 492, 493. So I can just sit on this. And if it gets out here to 492, 493, I've made my money. I can shut it down. And the longer it takes to get there, the better I am. Right? So if it never quite gets there, if it just sits around 487, 488, that's it. That's where I make my money on this thing. And then I'm done. What is the advantage of these? You'll notice it's not like I'm getting in at this support and it's going out at this resistance. This gives me the ability to just kind of say, hey, I'm generally bullish. If it goes bullish, I make money. If it sits, I make money. It's much more flexible. It's much more adaptive. It's much more broadly. I mean, the probability factor goes up dramatically. I absolutely expect to be right on these trades more than I'm right on straight directional calls and puts, 100%. This second trade is a diagonal spread. So what's the difference? You'll notice that, let me erase my line so I can come back down. You'll notice that these first ones, I have a 470 and a 470, and that makes, wait, what did I do? Nope. That should be right. 10, 10. Let me see. I don't understand why this thing is going negative on me. Oh, I'm too far out in time. Sorry. I'm like, what is happening? The first one is 470. This is a calendar because let me highlight the two contracts that are involved. It's this one and this one. Same strike, 470. Different expiration. January 5 is what I sold. January 19 is what I bought. Yep. So that gives me positive theta. This thing's making $50 a day just sitting where it is. The second one is also a calendar, 475 and 475. Same strike, different expiration, Jan 5, January 19. What makes this a diagonal is that this is different strike, 470 by 478, different expiration, January 19, February 16. So I bought further in the money, farther out in time, and now I can sell time against it. So if it gets close, if it gets to January 13th and we're close to 478, I can buy back the 478. I sold it for 469. I can buy it back for $1 and I've made 369. And then what can I do? Then I can sell 2 weeks. Then I can sell January 31s. And when I'm done with that, then I can sell February 16s and I can make that a vertical at the end. So I have a lot of flexibility with this. So I think we're going to have fun watching these together, managing these together. Remember, if you're like, I'm lost on what you're doing, Scott, go back to the options foundations. Of course, we do have a class tonight. We're talking about butterflies and condors, iron condors. Go back to last week's options foundation, watch the time spreads because we're going to try to incorporate those more. They bring a different dimension. It's a different product. If this is your business, directional trades is a product. Now you could do directional bounce trades, directional continuation trades, directional breakout trades. That's a product. And each one of those are sub-products. This is completely different, right? This is completely different. This is a time concept. This is volatility concept. This is capitalizing on different elements. And so this provides us diversification in our trading, and it provides a different product. So very excited to introduce these. I'm glad that we touched on them. I'm glad that the conditions are in a place that we can do them. So yeah, awesome. Thank you, Jeffrey. I'm glad you like it. I know it's a lot. When I put this whole thing together, it all can work together. Look at this. I've got this great expansive thing. As long as the market stays below 482, this thing just keeps cranking out time profits. Boom, boom, every day. So when markets end up grinding, which we know they're going to, as bullish as we are, we know it's going to move into these areas that just all of a sudden it goes sideways for 2 weeks, 3 weeks, 4 weeks. And your directional trading slows down, and this just keeps on cranking out profits. Are they home runs? Absolutely not. Are we getting on base, moving, advancing the runner and starting to score runs? Yes, absolutely we are. So, all right, I've stole 8 minutes of your time. It's good to see everybody. Market looks great. We feel great. Plenty of opportunities to trade. And just because there's plenty of opportunities doesn't mean we're not going to still take losses. You've seen me. I think I've taken losses that other people weren't in. So look, we're ready. It's good to see you guys. Have a great day. Tonight, 8:30 p.m. Options Foundations, we are having it. Thursday, we are having it. Although there's a very, very good chance it's going to be Gary. And I may not be there to introduce him. So he may just dive in, introduce himself, and talk about option Greeks. Everything else is the same this week. The rest of the schedule is the same. So I'll see you guys soon. And as always, happy trading.